The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. Big percentage gains for the major averages today to kick off a shortened week of trading. The market will be closed Thursday, of course, in observance of Thanksgiving, and a half day of trading on Friday. Expecting a very light market in the volume, volume in the market this week. We had options expire on Friday, so not surprising to see volume on the New York Stock Exchange and NASDAQ tracking quite a bit lower than what we saw Friday. Friday on the NASDAQ, we had 2.14 billion shares. That's on the heavy side for the tech index. We're tracking about 20% lower than that today. If we kind of stay the way we are, we'll probably come in around 1.7 billion shares today on the NASDAQ, which is right around average, maybe slightly above average. Volume Friday on the New York Stock Exchange, also above average due to options expiration at 940 million shares. We're tracking about 30% lighter than that today, which would bring us in probably around 655 million, again, if things stay the way they are right now. But big percentage gains for the NASDAQ composite. Let's take a look at the tech index. It is up 51 points, 1.8%. to 2904. When we're talking about a buy signal from the market, a 1.8% gain certainly is within that threshold. That is a sign of strength. It is powerful. The issue, of course, that we're dealing with right now is that we are only 2 days into a rally attempt. What does that mean? Well, it means that you can be sure that at least some of the buying today, maybe not 100% of it, but a good portion of it is short covering, people that have been short the NASDAQ since September, taking advantage of the price weakness. Is it really new money coming in from the sidelines? You know, that might be part of it. Maybe there are some fund managers, some other institutions placing bets that we are in fact going to rally between now and the end of the year. Maybe it's the market's way of saying that there absolutely, positively will be an agreement on Capitol Hill between Democrats and Republicans regarding the fiscal cliff. Personally, I don't think there's any chance that an agreement is not going to be reached. I think that both Republicans and Democrats know that if an agreement is not reached, it is going to result in market mayhem likely, and what is that going to do to investor confidence? I don't think that's in the best interest of Republicans or Democrats at this point. So I'm sure some sort of agreement will be reached between now and the end of the year. Whether that means it's going to be the fuel for a new market uptrend, that remains to be seen. But what I know right now is that we are only 2 days into a rally attempt for the market. Day one of a rally attempt was Friday. Again, options expiration. It was a very bullish day for the NASDAQ, no question about it. It closed well off its low. There was a good juice behind the move, and it was skewed a bit because of options expiration, but still the composite closed up near its session high. It is moving nicely higher again today, but again, volume right now tracking about 20% lower than what we saw Friday. So good day so far for the NASDAQ composite. Don't forget about the concept of overhead supply here. I talk about it a lot when it comes to stock charts. It's certainly an issue for the major averages here as well. Headed into today, the NASDAQ was probably 10, 11% off its recent high. And, you know, as an index works its way higher, it's going to have invariably resistance, selling pressure to work through. It's an issue. It's an issue for the major averages at this point. It's certainly an issue for a lot of growth stocks that have been hit hard by institutional selling in recent weeks. But Right now, you can see the NASDAQ composite still has a ways to go to get to its 200-day moving average, which is 29.84, 29.85, thereabouts. And then this blue line here, the 50-day moving average, all the way up at 30.51. So, you're talking at 150 points the NASDAQ would have to rally just to get back to its 50-day moving average. And sometimes these support levels often turn into resistance, and that's worth paying attention to. So, day 2 of a rally attempt for the NASDAQ composite. S&P 500, let's take a look at that index. We'll see that it is up near its session high as well. Again, volume on the New York Stock Exchange today tracking about 30% lighter than what we saw Friday. S&P 500 currently up 23 points, 1.7% to 1382. You can see it's basically trading right at its 200-day moving average here. Is it a ceiling? Is it not? So we'll see. We'll see how the S&P 500 finishes today, and the Dow Jones Industrial Average. Day 2 of a rally attempt for the blue chip index. It is up 176 points, 1.4% to 12,764. Still stuck a ways underneath its 200-day moving average. Yield on the 10-year note today up a little bit to 1.61%. The 30-year bond also up slightly to 2.76%. Market benefiting from the weak dollar. Let's take a look at the greenback index here. There it is. Take a look at the greenback index, and we'll see that Friday it closed at 81.26. Today it is down 38 ticks. That's about a 0.5% decline, and to 80.88. The 200-day moving average for the U.S. dollar index is 80.71. So right now it is about 15 ticks above that support level. Let's take a look at that UUP. This is that ETF, the Deutsche Bank U.S. dollar bullish fund, like clockwork. See how it rallied up to its 200-day moving average, got turned away Friday, and it is under a lot of pressure today. So initial resistance at the 200-day moving average for the UUP. It is down 9 cents right now to 22.15. Its 200-day moving average is at 22.27. So, with gains like we're seeing today, you'd think you'd be able to pull up with some of your favorite screens and see just plenty of action in the market, plenty of buying opportunities, plenty of opportunities to put money to work. And you know what? I got to tell you, I'm not seeing much. And it's a little frustrating because you'd think that, God, there's got to be stuff out there moving. Apple's moving. Let's take a look at Apple. I got to try to go a show without talking about Apple, but hey, Apple's up about $35 today, 6.6% move. It is now trading at 562.48. A bullish upside reversal in Apple on Friday. We talked about it on the show late last week that probably is going to give some additional follow through, and that's what we're seeing today, up another 6.6% to 562.48. But you know what? This is still a broken stock. It's still a broken stock no matter how you slice it. Why is it broken? Well, it's broken because of all the institutional selling since September. It's broken because it's still underneath its 200-day moving average, which I suspect could be a resistance level at this point. 592 is the 200-day line. So Apple still has to rally another 30 points just to get to its 200-day moving average. And then from there, another almost 35, 40 points to get to its 50-day moving average. So, congrats to the longs that bought recently at 510, 520. That's a great trade. You quickly got 30, 40 points there. But this stock is not out of the woods yet by any means. So, and I've been pretty vocal about how I feel about Apple. It's it's a stock that nobody ever says anything bad about, and that's fine. The euphoria is always always seems to be at excessive levels with Apple, and there's a lot of myopia too. In terms of this company is perfect, and they're not going to make mistakes, and it's only a matter of time before buyers come back in. So we've seen that the past 2 days. It is still below some pretty significant resistance levels here. So in the end, Apple's strength going forward is going to be predicated on if fund managers are going to re-embrace this stock? Are they going to come back in and start buying it? It's not clear to me that that's happening. It wasn't clear to me that it was happening on Friday. It's certainly not clear that it's happening today in a low volume session. But institutional buying is the main fuel for stocks gains. I suspect that there's probably some short covering in Apple going on today, just like the broad market itself. So, bottom line, day 2 of a rally attempt for the major averages. The market is not in a confirmed uptrend yet. The earliest we could see some sort of buy signal from the market would be on Wednesday. But Wednesday is the day ahead of Thanksgiving. Do you think Wednesday is going to be a high volume session where mutual fund managers are going to be in the office ready to buy stocks? And no, a lot of people are going to be on vacation Wednesday, so it's probably going to be a low volume session. So I'm not so much interested in what happens to the market this week as I am what happens to the market next week. I think next week, probably towards the end of the week, hey, we could get a buy signal Monday, Tuesday, Wednesday, Thursday, sometime next week. And if we do, then at least I can say the market's in an uptrend. The market tide is flowing positive. Let's see what is out there to buy. What I'm seeing right now is a lot of charts that look like Apple. Broken stocks that are trying to rally back, but it's too early in the rally to think that it's going to amount to anything. There are stocks that have been holding up pretty well. We talked about a lot of them. Last week. We'll talk about a few more today. And don't forget, tomorrow being Tuesday, that's going to be my weekly update to Ultimate Growth Stocks. And if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. In the breaking news area, in red letters, you'll see Try Out Ultimate Growth Stocks. 30 days free to test drive my approach to the market. My model portfolio is in cash. Right now, I'm waiting for the new leaders to set up, and that is still a work in progress. And we'll see how things shake out over the next few weeks. I think it's possible we could see a tradable rally into the end of the year, but before that, for that tradable rally to gain any sort of traction or legs, we need to see that buy signal first. So that'll come in the form of a follow-through day, big percentage gain, 1.5%, 2% or more. But you want to see a good rush in trading volume. You want to see good volume. You want to see volume coming in higher than the prior session. Again, the earliest technically we could see one would be Wednesday, but I'm expecting Wednesday to be a fairly low volume session for the market. And if by chance we do get follow through on Wednesday and volume happens to come in higher than Tuesday, listen, if we get say 500 million shares that trade on the NASDAQ on Tuesday, and then we get 550 million that trade on Wednesday, well, that would be a buy signal that would be kind of middling and not very powerful. So you'd probably treat it with a grain of salt. So again, not so much interested in what the market what happens in the market this week, but next week could be telling. Bottom line, new leadership still needs more time to set up. Ken Shreve with you on Breakout Investing. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you, 877-927-6648. I'll tell you, stock market bulls have to be happy with the way the VIX looks here, the CBOE Volatility Index. You can see a big decline for the VIX on Friday. More follow-through to the downside today. Breaks below its 50-day moving average at 1617. So this is just a very weak chart here, a weak chart that is probably signaling lower prices ahead for the VIX, lower or continued technical weakness in the VIX. Would mean that we could actually head higher here into the end of the year. And again, that is definitely a possible scenario. We are 2 days into a rally attempt for the major averages, so on day 4 or later, it would be nice to see some sort of meaningful follow-through with a big percentage gain and higher volume. It's impossible for the major averages to follow through 2 days into a rally attempt. When you get the initial first day of a rally attempt, which we saw Friday, okay, it was a bullish day for the major averages, no two ways about it. No matter how you slice it, it was a bullish day, but it was only day 1. So what you had is you had short covering going on Friday. You've got more short covering going on today, and you probably even have a little more going on in day 3. But eventually those short positions are going to get covered, and then it's time to see, okay, what's going to happen here? Is new money going to come in from the sidelines with conviction? Is it going to come in sort of in slow motion? Are we going to see a follow-through day with conviction? Are we going to see a follow-through day or buy signal from the market in sort of middling, lackluster volume? I mean, all these scenarios are possible. other scenarios that we don't get any follow-through at all, and we eventually start heading lower again. But again, I think the pieces are in place for an agreement on Capitol Hill when it comes to the fiscal cliff. That would certainly remove a layer of uncertainty for the market, and wouldn't be surprised to see a rally between now and the end of the year, but I'm going to stay disciplined and follow my rules. I want to see a legitimate buy signal from the market, and the bottom line is we just have not seen it yet, which means that new buys are risky because the market trend is not upward yet. All right, talked about the weak dollar today. Checking in on gold here, good day for gold, up $19.70, 1.2% gain for the metal to $1,734.40. Now, gold is interesting. You've got the VIX telling a bearish story. You've got the GLD rallying today. It's up $1.89, 1.1% to 167.77. Question is this 50-day moving average going to be resistance? It was resistance several days back, rallied back up to the 50-day moving average, got turned away, fell for 5 days out of 6. Now it gaps up today, and it's at 167.77 right now. The 50-day moving average is at 168.96. So about $1.25 to go to get back to that 50-day moving average. Does it overtake it? It will overtake it if the dollar continues to weaken, but if the dollar strengthens again, that's probably going to have a negative effect on the GLD. So gold is not out of the woods here. It's closed at I think a 1-month high today, but this GLD is still not clear to me that it's ready to head higher. If it moves above that 50-day moving average with conviction, with some volume, then you could see higher prices ahead for GLD, but too early to say at this point. Crude oil today, I believe this is January crude now, ends at $89.28 a barrel, up $2.36 on the day. Taking a look at some Dow components here. Intel, INTC, news today that CEO Paul Otellini stepping down in May of next year. Intel not doing much on the news. It's only down 5 cents to 2014. Yeah, you can see how much Intel has really turned into a problem stock here. Really not doing anything for shareholders at this time. Big changes in the PC industry, shift to mobile computing. Intel just kind of left behind in that whole shift. They're trying to make inroads in wireless mobile computing, but you can see its recent price performance is really just about slowing growth ahead, and will this company ever be able to grow earnings and sales like it used to? And at this point, being a mature company, that's not likely, in my opinion. Take a look at some financials in the Dow today. Bank of America inside the Dow up 3.8% to $9.47. Bank of America fell below its its 50-day moving average last week, break below its 200-day moving average. It is back above the line here, so not out of the question that financials could lead this market higher here. Citigroup also back above its 50-day moving average, up 3.1% to 36.06. And finally, we'll check in on the XLF here as we head into break number 2. XLF up 1.7% to 15.53. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing, 877-927-6648. A shortened week of trading this week. Of course, Thanksgiving on Thursday. The market will be closed, probably very, very light volume on Wednesday, and light volume Friday as well. Black Friday, half day of trading. So fairly quiet this week. It is ironic to see the nice percentage gains in the major averages today. Stocks certainly starting off the week with a bang. Mentioned at the top of the show that volume right now on the exchanges, not surprisingly, tracking quite a bit lower than what we saw Friday. Volume Friday was skewed a little bit due to options expiration, but right now we're tracking about 20% lighter on the NASDAQ. That would bring us in, let's see here, NASDAQ 20% lower, 2.14 billion on Friday, probably bring us in 1.7 billion, something like that. And then volume on the New York Stock Exchange tracking about 30% lighter than what we saw Friday, so probably looking at 650, 655 million or so. So light volume today, nice percentage gains, but can't stress it enough. Got to wait for the market to prove itself a little more. Happy to wait just a couple more days for better clarity, and we'll see. But certainly open to the possibility of a rally between now and the end of the year. Economic data today, we had existing home sales. Not too bad, came in better than expected. up 2.1% from September to 4.79 million units in October. The consensus estimate was for 4.7 million units. Tomorrow, housing start and building permit data for October. So home builders in the news not only yesterday, but not only today, but tomorrow as well. Let's check in on the ITB. This is the IRS, Dow Jones U.S. Home Construction Index. It is trying to get back above its 50-day moving average, but near its session low here, back below it, up 33 cents on the day to 1988. This is a ETF that certainly, you can see, been hit hard by institutional selling over the past couple of weeks, trying to rally back today, but trading near its session low after early strength. Tried to get back above its 50-day moving average, but back below the line for now. On Wednesday, we've got, that's really going to be the end of the week, more or less, for economic data. We'll have weekly jobless claims out a day early on Wednesday. We'll also get the final reading for November from the University of Michigan Consumer Confidence Index. Remember, just recently, the Investors Business Daily TIP Economic Optimism Index plunged 10% to 48.6. Perhaps even more unsettling was a 20.8% drop in the 6-month economic outlook. That fell to 46.8. It measures how consumers feel about the economy's prospects over the next 6 months. So recent IBD data show that we could get a weak reading on Wednesday from the University of Michigan. Taking a look at some earnings reports today, let's check in on Lowe's. Not that long ago, Home Depot had a nice earnings report. Look at Lowe's. Gap's up 6.1% today to $33.94. Nice technical breakout for Lowe's. The story here, nice beat. They beat the consensus estimate by 5 cents with profit of 40 cents a share, up 11% from a year ago. Sales also came in better than expected, up 2% to $12.07 billion. And also nice revenue outlook from Tyson Foods, not showing nearly, well, I was going to say not showing nearly as good relative price strength as Lowe's, but rocket stock today, Tyson Foods, up close to 11% on the day to $18.72. Strong revenue guidance from the company and a big bottom line beat as well. Earnings up 112% from a year ago to 55 cents a share. That was 11 cents above the consensus estimate. Sales were flat at $8.37 billion, a little bit below estimates, but again, it was a strong revenue guidance for fiscal 2013 that's bringing buyers into the stock today. Have you seen the move in Flowers Foods, FLO? Some analyst chatter saying that this company is, one of the main beneficiaries of the Hostess liquidation. Twinkies, ding-dongs, ho-hos, all that stuff. Well, Flowers Foods, is though they're also being talked about, maybe they're interested in buying one or more parts of the Hostess biz. But it brought buyers into the stock in spades on Thursday. Big move for the stock on Friday, and it moved again today. It was up as much as hit a high of 24.04 today, but is down near its session low, still up 2.5% to 22.89. So we'll see how that eventually shapes up in coming days. Flower Foods may be interested in buying one or more parts of the Hostess biz, and even if they don't, not having a Hostess in the game could be good news for the bakery company. So that's why Flowers Foods has been acting well. Take a look at shares of Cena. Headlines around Cena today. Apparently, it was had a very rough day on Friday. You can see a big gap down for the stock, but it's up 9% today to 49.18. News here is that China e-commerce firm Alibaba is perhaps considering a stake in the web portal of up to 15 to 20%. Some published reports saying that Cena operates a sort of the Twitter in China. It's called Weibo, but that originates from the Sina portal. Broken stock here. Another stock that's just been hit hard. Corrects down from 68 all the way down to 46 bucks a share, and rallying today on news of a possible stake by Alibaba, but nothing confirmed there. Cisco Systems over the weekend said it's going to acquire privately held Meraki in a cash deal valued at about $1.2 billion. Acquisition will add to Cisco's wireless and networking technology portfolio. Cisco acquires companies all the time. Growth through acquisition company, but they've been having a hard time growing Cisco because it's a mature company, and but Cisco working on 4 straight gains here, up another 1.8% today to 1832. 1832. All right. There was also a report over the weekend that Yahoo and Facebook are possibly in talks about forming a search alliance or building a search engine together. Yahoo, has been an incredible price performer, up another 2.5% today to 1831. But I was reading Kara Swisher over at All Things D, and she said her sources are saying that they are not in talks. Kara talked about the fact that Yahoo obviously still has a 10-year search partnership with Microsoft. Bing is the preferred search provider at Yahoo, and that's going to be a very difficult partnership to get out of. It's possible that Yahoo could, but it'd probably be very expensive. So we'll see about this story, but according to All Things D, there are no talks going on. Yahoo, if you look at a weekly chart here, it has been a tremendous performer in the market. You can see a recent breakout for Yahoo over 16 bucks in late October. It's working on 5 straight weekly price gains. So even though it is moving today in volume, this is an example of an extended stock. You don't want to chase breakouts like this that have run so far. The swing point here was just over 16 bucks. Okay, and that breakout happened in late October. If you missed it there, it's up 3 to 4 weeks since then. Don't chase. Wait for a pullback. And if the market does weaken anew, you'll probably get a pullback in Yahoo. And if it's a low volume pullback and the stock does not suffer a lot of technical damage, those are your times to get into breakouts that you missed the first time around. Taking a look at Facebook, see how Facebook is rallying on this news of some sort of talks going on with Yahoo. After early strength, Facebook is now down 2.2% to 23.05. Other movers today that we can take a look at, with the NASDAQ up 1.7, 1.8%. You'd think tech names would be moving. Intuitive Surgical, but this is a good example of what I'm talking about here, because Intuitive hit a high of 549.98 today. It was actually looked like it was intent on taking out a swing point of 551.93. You actually had a breakout taking shape. Problem is, not much volume in the stock, and look at how the gains have faded. There's just not enough juice in this market. There may be soon, but just not yet. Intuitive up $7.23, 1.4% to 541.15, but trading near its session low after early strength. The same thing for Tupperware. Now, we looked at Tupperware last week on the show. Not a bad day for Tupperware. It did take out a swing point of 63.59 early in the day. It hit a high of 64.36. The volume is decent. This is a stock that's still showing decent signs of accumulation. It's trading in the middle half of its trading range here, up 1.8% to 63.64. But is it a powerful breakout? No. And that's the problem. When the market's not in a confirmed uptrend, yeah, there's going to be a pretty ample supply of stocks with good fundamentals showing relative price strength. But when you're looking for base breakouts, you want to see breakouts with conviction. You don't want to see breakouts on the fence. Volume looks to be okay in Tupperware brands, but certainly nothing to write home about. So Again, the market still needs to prove itself more. If, in fact, new money starts coming in from the sidelines, which, again, to reiterate, it is a possibility, then you would expect some of these good technical setups to really start working. Not only that, but you'll see a much bigger supply of stocks as well to choose from. Right now, it's just the opportunities are very, very isolated. Let's take a look at shares of MasterCard, another high-quality institutional quality stock. You look at a weekly chart, and it is in a late stage base, but you look back over the past 2-3 years, you're not looking at a stock either that is up 500, 600, 700%. So MasterCard could still work here. You've got a couple of swing points here, 477 and 486. So MasterCard right now up $12.46, trying to take out a swing point. Volume just does not look good, though. See, the volume it saw Friday looks like it's going to come in well below that today. MasterCard's recent high over here of 486 is still in play, but this is another stock that's making a case it wants to break out, but there's just not enough juice in the stock at this point. I didn't get a chance to listen to 3D Systems conference call today, but the stock is rallying nicely, up 8.2% to 41.17. The company did hold a conference call earlier today addressing some recent published reports that were talking about the company's accounting practices. So apparently I won't. They had a conference call today. I don't know what was said. I meant to get some highlights of it, but I don't have it at this point. But apparently, stock up 8.2%. Decent volume today. What they said in that conference call seemed to be palatable to Wall Street. So 3D Systems up $3.13 to 41.17, but still, this after some pretty significant institutional selling, you're looking at two days of rallies here. Not a stock that is buyable yet in my book. Other 3D players, Stratasys, looking interesting here. This is actually a better technical setup in my view than 3D Systems, so Stratasys is definitely one to keep an eye on. It is volatile. It can trade a bit wild, and so you have to have a stomach to hold a stock like this, but fundamentals are pretty good. Its chart looks pretty good. Swing point of 69.08. That's going to be its intraday high set here in late October. The stock is up 4.4% today to 66.23. And again, swing point we're going to watch here is 69.08. If we do get some follow through in this market, Stratasys is a breakout candidate, no doubt about it. Mentioned Amazon finding support at its 200-day moving average on Friday. Decent follow-through for the stock today, but again, a lot of big sellers in Amazon recently. My bailiwick is not buying stocks when they're this far off of highs. I like to see stocks that form the right side of bases eventually attract new institutional buyers and break out from those bases. Amazon is not doing that by any means at this point. Second day of a rally attempt for Amazon. It is trading near its session low after early strength, up $3.80, 1.7% to 229.03. But kind of slack volume in Amazon as well. Google on Friday finds support at its 200-day moving average. It is trading up near its session high. So interesting, decent buying demand in Google today. It looks like volume here is going to come in lower than Friday as well, but shares of Google up 3.1% to 667.32. So 4-day losing streak looks like it's going to come to an end for Google today. Firmed up in its 200-day moving average on Friday, and a decent day of outperformance today. We do have some earnings reports to get to after the close today. We'll talk about the earnings calendar for the rest of this shortened week of trading. We'll do that when I come back in about 3 to 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
5 minutes left to go in Monday's session. We see the NASDAQ up near its session high here, up 62 points, 2.2% to 29.15. Unfortunately, people that watch volume in the market, we kind of knew that chances were pretty good volume would come in lighter than Friday's levels. Volume Friday was a little skewed, a little heavier than normal due to options expiration. Right now, NASDAQ volume tracking about 20% lighter than Friday, but still good day of outperformance for tech stocks. The S&P 500 also up near its session high, up 26 points, 1.9% to 259, and volume on the New York Stock Exchange tracking about 30% lighter than what we saw on Friday. So bottom line, you just don't have any conviction behind the buying. Obviously no sellers around today. Buyers are just moving the markets pretty easily here. It's going to be a low volume week of trading, no doubt about it. And again, I said it before, I will say it again. I am not so much interested in what the market does this week as I am what happens next week. I think there's a chance that we still could see some sort of follow through in the major averages, some sort of buy signal. Hopefully it's a buy signal with some conviction, but it's possible we can get a buy signal without much conviction. If that happens, well, you can still nibble at a few stocks, but know that it wasn't powerful follow-through. So it's unlikely we're going to see it this week, but it's possible. Today being the second day of a rally attempt for the major averages, I suspect you've got a lot of short covering going on today. You may also have some new money coming in from the sidelines, but normally during the first few days of a market rally, that's when the short covering happens, especially after that extended declines that you see here in the S&P 500, really all the major averages at this point. A lot of selling from September all the way up until late last week. So some short covering going on in the market. It's possible we could see some follow-through on Wednesday, but with that happening one day ahead of Thanksgiving and a half day of trading on Friday, again, I think I'll wait till next week to get a better read on this market. So that's generally my take on things. Nice to see the big percentage gains today, but not enough to convince me yet that this market is ready to turn higher. Not to mention the fact that my growth screens still are not giving me much in the way to work with. Now, ARM Holdings, a name that we have been watching for a little while. Somebody emailed me today, say, hey, look at this, nice breakout in ARM Holdings. Actually, that's not the case. It is up 3.6% today. Volume is strong, relatively speaking. Last trading around 35.67, but when you look at a weekly chart for ARM Holdings, what you see here is a stock that is working on 5 straight weekly price gains. The last breakout was over $29 a share back in this area right here. So there's your breakout, and now you have a stock that's up for 4 straight weeks and making a case that it's going to make 5 straight weekly price gains. So you're looking at an extended stock here. At this point, boy, a pullback to the 10-week moving average in light volume to 31 would be ideal. We'd need some weakness in the broad market for that to happen, but it is an extended stock, and if you're thinking of buying it now, you're chasing a stock where the train has already left the station. Coming up after the close, let's take a look at QIHU. Wouldn't be surprised at all to see strong numbers from this company. It's emerged as a legitimate competitor to Baidu. Pretty decent technical setup ahead of earnings, up 3.1% to 2370. We'll see what QIHU has to say after the close today. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.